name is Lisa Wardlaw. I'm broadcasting live from Atlanta, Georgia today. And joining along with us, we have two of our fellow panelists. Some others are having some technical difficulty, but maybe while they join us, maybe it would be a great time, Jay and Cory, for you both to introduce yourselves. So welcome to the live session today on geospatial data sustainability. Jay, why don't you kick us off with a quick intro, and then we'll jump over to you, Cory.
Sounds good.
Sure. Thanks, Lisa. Hi, everyone. This is Jay here. I know Lisa's in Atlanta. I'm currently in New Jersey, so right next to Cory. I know Cory's in New York right now. So very nice to meet you guys. And then thanks for joining today's live session. I support the insurance vertical at Ecopia, and I've been with the firm for like a year and a half now. And yeah, looking forward to talking about geospatial data sustainability today. Thank you.
Thanks for being with us, Jay. Cory, over to you.
Great. Well, thanks, Lisa. So I'm really looking forward to the discussion today. I think it'll be very interesting. So Cory Isaacson, I'm the CEO and co-founder of reThought Insurance. We are a flood specialist MGA. All we do is flood insurance. We are the best underwriters of flood anywhere, and we've been very, very successful in the market. And we use Ecopia a lot, and more to come, actually. And so it's a very exciting partnership, and I'm totally glad to be here today. And geospatial information is just critical to all types of insurance, and I'm looking forward to the discussion. So
excited you could join us. And let's flip over to you, Alex. Just a quick introduction for our audience.
Yeah, absolutely. So great to be here with everyone today. So I'm Alex Taylor. I'm the Global Head of Emerging Technology at QBE Ventures. So I sort of have a dual role. On one side, I invest in and partner with exciting new technology companies in the insurance space. And on the other side, apply that technology to the insurance carrier that I work for, which is QBE Group, which insures risks that are relevant to the discussion today in many cat-exposed countries around the world. So really exciting to talk about this topic today.
Awesome. And I think Thomas, he may have popped off. We'll see if he pops back on. But Thomas Phillips, I'll let him introduce himself, but he is the head of Geo for Swiss Re. And just by quick, let's get into the meat of the discussion today. Oh, there he is, Thomas, as if on cue. Would love for you to introduce yourself to our audience, then we're going to get straight into the discussion. Can you hear us?
So, yeah. Hi. Yeah, I can hear you. My computer's, I don't know why, my company, I'm working for Swiss Re. I'm in charge of all of the geospatial data at Swiss Re. And as such, I look through space and to give some insights. I hope you can hear me. I had terrible difficulty joining. As always, when I was preparing, it worked all fine. And now that we've gone on to the call, I've got some issues. So.
What I kind of love is all the geospatial people making it happen. I'm like, do you guys have like a special beacon that sits on top of you to make sure you're no, I'm joking. Okay.
Straight to satellite, Lisa. Straight to satellite.
Okay, we could play Where in the World is Lisa, and you could tag me and make sure my Uber gets to me on time. That would be helpful. But no, let's get into this discussion, right? So, and for those who don't know that have joined us in the audience, I spent the last, better part of 2 years getting into working with for near and around geospatial startups, geospatial insurtechs, and how to apply geospatial to insurance. It's been one of my core focuses. And I kept noticing a pattern as I started working on some of these solutions. And I'll call it like geospatial redundancy, and then it started making me think about geospatial sustainability, and not just with actual physical satellites and things, like in space, but also how we as enterprises are consuming and dealing with geospatial, because clearly, as Cory pointed out, there's so much opportunity and so many things we can do with geospatial, but there's also this, I'll call it corporate responsibility that we need to take when it pertains to all things sustainability. So with intent. But before we go into how you all are solving this, because you all are some of the people that I just idolize in this industry in terms of how you're solving for these problems. I'm like fangirling you all right now. But how did we get here, right? So let's take the audience back just a minute and talk about the need for high fidelity geospatial data. So it's like, all of a sudden these things became available. And then as consumers, like Pac-Man, it's like, mom, how are we going to get all this geospatial consumption and information? And I would love to hear from each of you, maybe a quick reflection on your thoughts on how did we get here? And then for the audience, we're going to talk about, okay, now that we're here and we ended up here, what problems did that create? And then, of course, we're going to talk, we wouldn't be a proper webinar if we didn't go through how are we solving for these things. So maybe we'll kick it off with you, Alex, on your thoughts on the need for high fidelity geospatial data and the I'll call it Gen 1.0. How did we get here? Why?
Yeah, look, and it's something that I spend every day thinking about. It's quite remarkable when we look at ever so recently the systems that we used in our industry and still use, and their approach to what we would call geospatial now. But I suppose the immaturity that was driven at the time through available data systems. So remarkably, some of the particularly older mainframes used in the insurance industry don't even record the address of claims related to the spatial component, or even at the underwriting phase. They might be at the postcode or zip code level. To look at particular risks and the exposure to earthquake, to hurricane, to flood. The direction that we're moving now, of course, is much more granular, much more detailed insights. So we're getting not just the GPS coordinates of a site and a pin in the middle of a building, but down, and we'll talk about this today, that the polygons that represent the buildings on a site. But of course, and I'll hand over to someone else in a second. The difference between looking at the zip code level and down to specifically where a building is, what floods that makes it exposed to, the nature of what we can see photographically. This is a huge challenge to our industry as well, because a lot of the time, the systems that we've historically invested tremendous amounts of money in aren't equipped to utilize that information. And that's what we have to move towards, is this maturity that allows us to take advantage of what's in the world today.
So let's cue off of that, because most of you probably heard me say, and I love the fact that you teed this up, Alex, high five. Like our systems used to be static, and they were created for static because we didn't have the capability for fluid or dynamic data. And then this beautiful thing of geospatial starts to emerge, and clearly it's been around for a long time, but it starts to emerge. So maybe Thomas, from your lens, why and how did this consumption occur, and what was like Gen 1.0, right? Like, how did we start grabbing all this geospatial information?
Yeah, so I had a quick look in the history books of Swiss Re, and I noticed that the first maps that we made public were in 1997, which is 25 years ago. You couldn't zoom in. It was just a global map with colors. And right about around that time, I actually built my own computer to do my own simulations. And at the time, the question was much more, how can I write an algorithm so I can actually solve the problem with my computer, because we didn't have all of those capabilities available that we have nowadays. Nowadays, it's infinite. I mean, we can do any data set. There is no limit to resolutions. You can just move in, and obviously, it's sexy to have high res, so everyone wants to go for it. And we'll get into that a bit later. There are obviously difficulties which come along. But I was going to say the same thing, as Alex already pointed out. We've gone from country, global level, down to having better resolution of risk or actual event data sets than the actual insured building. So it's turned totally around. And that's one of the things that we really, really have to get our heads around.
So, and now I'd love to get, since we've all mentioned kind of this level of granularity, Cory, if you'll just wait for one second, I would love to flip over to Jay and see, here we are with these capabilities. We've got this, almost an ability to stream content, infinite visuals, infinite information. And Jay, from your perspective, what have you seen evolving in like this Gen 1.0? Like, where did we start?
Sure. Yeah. Thanks, Lisa. So So Ecopia was formed about 10 years ago, and it was formed by one of our co-founders who was doing a PhD study. And the thesis was, how would a machine recognize anything like a human would? So that's how maybe a tree or buildings, etc. So that's how our technology was formed. Prior to tapping into the insurance industry, that was about 3 years ago. We did a lot of work with the federal government, the telco, and NGOs, and just taking those learnings and identifying the need for accurate data. We saw the need here in the insurance industry, and that's how we tapped the insurance market, and immediately got traction with it. Right now, we are currently engaged with nearly half of the top 100 P&C carriers, and 7 of the top 10 actually using our data currently. So essentially, in like 2 sentences, real quickly, we saw the need. We were already working with governments where the accuracy threshold was too high, and then just taking the same learnings, we tapped in the insurance industry.
So if we think about that, from what we've heard, like, okay, we had these systems, so like the capabilities are in excess of our systems. We've got infinite capabilities. I'm hearing like the foundation. And Cory, I'd love to then flip over to you and see from your lens, where did we start? Because I think the starting point is quite telling when we get to the next section of this webinar, which is like, okay, what problems are we all facing? So where did you see the industry start with its consumption and need for geospatial data?
Well, I think a good way to look at this, especially from our capability and what we do, is catastrophe models. Catastrophe models have evolved over the last 30 years. And a big complaint about catastrophe models from insurers is, we tested your model or we used it and we had a big event and your model was wrong. So, of course, the question, me being primarily a data guy, that's what I've been doing most of my career, is, well, what did you tell the model? That's the first question, right? And so it really depends what kind of models you're using to estimate the risk and how you're using them and what kind of risk you're actually looking at in insurance. And it varies widely. So what I mean by that is historical geocoders, if you feed in an address, you would either get something that's on the building if you were lucky, which wasn't very often. You might get it in the middle of the street. You might get it down the road. If the geocoder can't figure it out, it will be in the middle of the zip code. And I've actually seen it in the middle of the state. So if you're trying to evaluate.
That's really helpful. Well, maybe in Louisiana, that's okay, Cory.
just barely, believe it or not. So we don't write anything below I-10 in Louisiana, so we need to know where is it below or not. Anyway, but the point is that approximation of building location was very, very common, and that's the key metric and the key piece of data. That geocode is one of the key things that you're telling any modeling that you're using to evaluate the risk. Now, if you're doing hurricane and you're a mile off and where the building is, kind of who cares? It's going to be okay. But if you're doing something like flood or you're doing something like wildfire, it's not going to work. Earthquake also is very generalized because nobody knows exactly where an earthquake's going to happen, and nothing is that granular there anyhow. But when you're talking about perils that have very, very highly localized information and specific information, that's what happens. So that was one factor. The other factor was the ability of systems to actually store data or access accurate data on properties, and because buildings is what we're talking about most here. When you're talking about property insurance, having accurate data about how is the building constructed, not just where it's located, but there's a lot of different factors. So all of those things were very primitive, and that data wasn't really available. And so how did that information get to an insurance company? From a manual form, usually, that the person who owned the building filled out. That, sometimes a spreadsheet or something like that. But so what happened is, I talked to a lot of insurance companies, very large ones. And, it's interesting to me that your bank that has your mortgage knows a lot more about your house than any insurance company does.
Yeah.
And what's fascinating is, if you don't pay the mortgage, then they get the house. If a loss happens, they get paid by the insurance company, and the insurance company pays the loss, of course, right? So the predictability for insurance has just been very hard to do. It's a very challenging thing anyway. You're trying to predict the future on things that you don't know what the cost is going to be. So there are so many variables and factors. It's just been a very challenging problem anyway. But if you're starting with something that's 10 miles from where you think it is, that doesn't help.
Yeah.
So, yeah.
So let's take all of this together, and a couple patterns that I saw emerge, and I came into this much later than many of you did, but been in insurance for 27 years. But the thing that I kind of started seeing emerge was, oh my gosh, we can get all this information that we never had before. And there was almost, this is our segue into the next section. It was almost this, I call it like my kids in a candy store. I want all the candy. I'm like, no, pick one. No, I want all of them. And I feel like in a way, Geospatial was kind of going through a similar experience, which is we have this, Thomas described it very eloquently, like infinite access to all sorts of solutions, to all sorts of data, to all sorts of different types of data. I mean, we can see at night, we can see through weather, we can see, high res, all the different things. But really the challenge became almost like, and I'll keep with the sugar analogy, it almost became a little bit like insulin resistance. It's like, okay, like with the fatigue, like we've got so much, how do we know what to do with it? And then of course, my observations where there became not only consistency issues, but like how it all hung together at an enterprise level, which is important. It's very important if you're underwriting risk. It's really important that you have this thing called lineage. Like, does that dot on the map match across all the different solutions you're using? To your point, Cory, what are the materials made of? Does it have, a basement? What are the actual materials in the basement? So let's move on to the second section of our discussion today. And from your lens, from everything everyone's been experiencing, like Gen 1.0, there, of course, have been challenges that result with the data and the associated fatigue. I used to call it geospatial fatigue a lot when I was working with some insurtechs. What is the magnitude of this, and how are you all seeing it as solution providers, as reinsurers, and as insurers and innovators, right? Because all four of you are trying to kind of solve for. We're going to get into some of the things you're doing in the next section, but would love to know for you to give the audience, like, what challenges and hurdles are you seeing? And maybe I'll start with Thomas on this one. Looks like you're with us, Thomas. Do you want to give your lens on what you're seeing? And you've got a really interesting lens coming at it from a reinsurance perspective, because you see portfolio risk, and you and I have often talked about offsetting and some of the other things that you may be looking to do, but would love to see your lens on this. I think you might be on mute.
Oh.
There you go. I think you're good.
Now I'm good. So it's really funny that we've been discussing buildings for the last moment, because one of the interesting things, it was actually for a brief point in time, buildings was a good level to look at. One of the key issues that we are beginning to face are, if you think of buildings, and I'm based in Europe, a lot of buildings, when you look at them from the surface, are actually individual buildings, but they are joined through a basement or a garage underneath. So what are you looking at? Are you looking at one building now, or are you looking at a dozen buildings? The same thing we were just looking at New York for the metro system. Is each individual metro station an individual building, or are they an aggregation of buildings, or is the whole metro system one system? And what you pointed out on the geocoding side, that's exactly the question. Nowadays, I think one of the key things, and which brings the fatigue part into it, is you really have to ask your question first to know what kind of a setup you want to use to answer it.
Yeah, and I was thinking back to specific storm 2 years ago, Thomas, that kind of went up the Northeast. So it started as a hurricane, of course, and hit Louisiana. And then it became like an extreme weather event, flash flooding. So Cory, flash flooding, and hit New York, New Jersey. And it was really the backup, if you will, of the sewage systems, right, that were coming into some of the houses, right? So that really articulates that point on many levels. We have climate, and we have the impact of these storms in more higher frequency, higher severity, and extreme weather events, which aren't just necessarily catastrophes. And then the connectivity of like, well, what is it? Is it connected through the sewage systems? Is it connected through the metro? Like all these points that you're talking about, which we didn't used to think about, right? Like we didn't used to have the capability. So it's kind of like next level. Like, you know, when we get one thing, two more, like the two-step, maybe we would call it in the country, you get one forward and two back. Like, how are we thinking about solving for these problems? And I'd love to know your thoughts on that.
And just to add to that point, you know, in the past, when as Alex pointed out, you know, you did it on the zip code level. Nowadays, you can actually look at the actual distribution of the risk at the end, or the payouts at the end, and that's what we do as a reinsurer. And you can actually see whether your assumptions that you made at the beginning are actually correct. So you can actually see whether any kind of anti-selection is occurring, and you can start to see patterns. And so at the end of the day, there's so many possibilities, so much information you can get out of the data sets that you're looking at, and that's precisely what we're doing.
So with that, maybe we'll flip to you, Cory, quickly, because you know clearly I had to throw in a flood example there. But what challenges are you seeing? Are they similar to what you know they're seeing at the reinsurer level, where you're like, okay, I'm trying to understand all these different sources, connect it to the events, and connect it to the like resulting probability, how good were my, assessments, risk, et cetera? Or are you seeing additional problems in addition to what Thomas described?
Well, I think it comes down to visibility and access of data. So if you I really have tremendous respect, by the way, for reinsurers. I've worked with all of the large ones and some smaller ones, and it's tremendous what they do. But if you think about it, reinsurers are reinsuring other people's underwriting and other people's.
Oops. Yep. Well, let's see if that. So maybe what we'll do. So if you say reinsurer, we took both of them out at once. It was like a bowling game. I think they'll be back with us quickly. But Alex, you and I have had the benefit of talking about this a lot, right? Because you just can't escape me when you're in geospatial, Alex. But no, I would love to hear what your thoughts are on this, with the challenges that you're seeing in the industry, and maybe some things that were unintended in the path that we went down in like 1.0. I would love to hear your view on that.
Yeah, absolutely. And look, I'm a huge advocate for the assets that the insurance industry has today in things like claims data. But we have to remember that claims data is only usable in the context that we have information historically, going back 20 years, that are relevant to the types of claims that we've seen progress over that time. So going back to what Thomas and Cory were saying, if you look at data models for geospatial, if you were asking someone 25 years ago what they would need in order to accurately underwrite risk, to handle claims related to those risks, they would have said, give us the location. So, someone designing a big iron insurance system 20 years ago would have coded in the facility to capture floating point representatives, GPS coordinates of where a building is. However, now, to your point before, Lisa, we're seeing this progression of this infinite amount of data, and it's not just building materials, it's not just SAR data from space-based radar, it's not just flood models. We almost have to be prescient in what we're likely to need over the next 20 years in building in our capabilities. Otherwise, accessing and utilizing the information we're collecting now and emerging risks becomes extraordinarily challenging. And look, we'll get to this in a moment, but I'm a huge advocate for partnering with InsurTech, specifically because it allows the industry to move more quickly than we otherwise would, to work on a timeline of months to years rather than decades in the evolution of our ability to capture information relevant to our risks. And that's the biggest thing that we have to pay attention to over the next 5 years.
So I have one like question for you on that, Alex, and Jay and I have been talking about this a lot recently, which is so I started doing like my own like informal pulse survey with people. Like on average, see, to Thomas's point, there's so much available, right? And everyone is solving for like a fraction of the puzzle. So at an enterprise level, how many bespoke solutions are you seeing on average? And this doesn't have to be just for QBE, because like I was talking to somebody at another large carrier yesterday. The average I keep getting, so I'll give you like my Lisa's pulse point on that. I'm seeing on average a minimum at an enterprise insurer grade level of 10 to 20 minimum. And those can include aggregators that are then bundling up, whether it's a platform or a risk aggregator or a geo whatever aggregator. They may have 10 to 15 behind them. So at the end of the day, on average, I'm seeing 30 to 40 solutions coming together in some form of like enterprise, and that's today. That's not like tomorrow what we're trying to do. But like, what's your lens on that? What are you seeing from your side, Alex?
Yeah, look, I mean, it's certainly up there. And look, I've probably seen 120 solutions across Geospatial just over the last couple of years. But the wonderful thing about that variety, particularly where you get overlaps in what you can be provided, is the ability to validate, the ability to get reinforcement of reality based on 2, 3, 4 providers agreeing on data. And even better, being able to feed back to those vendors after an event's taken place. When you get a ground truth, you get an assessor on site that says, yes, that is a tin roof. Yes, it has been damaged as a result of this hurricane. This cyclical nature of risk and observation and reinforcement means that ultimately the industry gets better data, and we collectively improve our ability to understand what it is that we're looking at and how to underwrite it. So I'm all for more participation in this space. And the trend that I'm seeing more and more now is derivative data. So you get a provider that provides high resolution visual or SAR data, and then someone that combines that together and provides another data source on top of that creates a new data point that we didn't have before. So it's very evolutionary, and it's happening extraordinarily quickly in this space.
So you're teeing up the question I wanted to ask Jay on this, which is, Jay, when we have on average, let's just safely say nobody really has fewer than 10, right? We're in the multiples, we're in the double digits, right? I don't think we've yet entered the thousands, but we're definitely in the double digits. Jay, what are some challenges that you're seeing with that and potentially resultant fatigue? And I'm thinking, I'll kind of lead the witness a little bit here. I'm concerned about things like data lineage. I'm concerned about things like sustainability, meaning redundancy. How many times can the same providers be doing similar things? So I love the bespoke layer on top, Alex, to your point, but there's like a formation layer that I see being repeated, to your point, like 120 different times, because you have to do certain foundational things to make the data geospatially consumable, right? So Jay, over to you, and then Cory, glad you're back with us. We'll pick it over to you in a minute.
Sure. Thanks, Lisa. Yeah, so I think the truth is that there's never going to be one vendor or one company that's going to be able to provide everything that the insurance carriers need. But the challenge that we're seeing is, Lisa, as you mentioned, is the data lineage inconsistencies. So there's one company that's providing roof reports. There's another company that's providing risk scores. There's one company that's providing location intelligence. But the challenge is how to match and fuse these data sources. And that's where we're seeing the challenge when we work with insurance carriers, with their prospects, is how do you match and fuse these data sources? So starting with the foundation, I know we talked this a lot, Lisa, is about enterprise geocoding. So of course we're providing.
By the way, you heard it here first. Hashtag enterprise geocoding. No, but is that actually? I joke with you all the time about this, Jay. Is that actually a thing? We'll talk about that in solutions. But are you seeing that as a challenge that people are adopting?
Yes, I am. We as a company we are seeing this as a challenge. So I just want to put an example into place. So let's just say we're providing our building footprints, geocoded building footprints to a carrier, and then they're using that for location intelligence, predominantly for underwriting use case. But then there's a different vendor that's providing risk reports or some sort of scoring, but they are using their own geocodes. So the challenge arises, like, whose geocode's right? First of all, figuring that out, and then, but the risk scores that the other vendor is providing, how do you match it to the geocodes, the laps and longs that we're providing? So the challenge is and I know we'll talk about how to overcome this, but I think like everyone needs to start at the bottom, like look at the foundation, look at what's the accurate geocodes, and then move up top. So it should be more of a bottom up approach. Once you identify the polygon and then the lats and longs on top of it, then you move towards property attributes and other risk reports. That way you know that you're 100% sure of the location intelligence. And then once you're sure, then you move towards property attributes. It's and one example that I like to use is imagine you want to extract property attributes for a hotel in Las Vegas, but due to inaccurate geolocation geocodes, you end up extracting attributes for a hotel next door. So all the risk analytics, it just leads to a lot of downstream problems because you just have inaccurate location. So again, just circling back to the enterprise geocoding, we ensured that, yes, I think we see that as a big challenge here.
Okay. So Cory, would love to know from your perspective, the challenges that you're seeing with data and any resulting fatigue, and how you all are getting that, if you are, that lineage across, like how do we see data consistency when it's coming from so many different sources? That was the one thing that we were kind of talking about when I think it bleeped you out for just a minute.
Well, I was making a great point to myself.
Oh, I'm sorry. Well, at least they heard you in the lounge. I'm joking.
I didn't notice. I guess the internet here is a little spotty. I apologize. So what I was saying is that, there's all kinds of different levels in the insurance ecosystem. You have MGAs like us that sit between reinsurers and carriers on one side and, the market on the other side. You have carriers. You have carriers that are backed by reinsurers. You have people that back reinsurers, which are ILS funds and other people, sometimes, public traded information. So the visibility goes down as you go higher in the stack. And what Thomas was saying, I really, really admire the people I know at reinsurers because it's a very, very hard job. Imagine that you're underwriting other people's portfolios and you have to rely on what they gave you. Well, how good is that? First of all, right? And look, everybody's trying and they're making it better, but it's more and more challenging the higher up the stack that you go. Unfortunately, there's more and more risk the higher up you go as well because you're responsible for the bigger sphere. And the whole goal of insurance is to protect people from loss. That's what we're doing. But if we don't protect the capital that actually does that, then we won't be able to keep doing our jobs. And so it's a very risky proposition. Of course, we're in the business of risk. And so data is a huge challenge because when you do this, especially if you're a reinsurer, you have to not only make sure you have decent data on what your portfolio is composed of from all of the other players that are doing that work, you have to make sure that there are solid underwriting guidelines that you're going to put in place for use by the underwriters and the underwriting teams at those carriers. And that's a very, very difficult challenge to actually get in place and make sure that it's done correctly. So if you look at a typical underwriter, especially if they're doing, let's say, large specialty risks, which there are quite a few people that are very sharp at this, they have various tools at their disposal. But let's say they're using Google Maps or Google Earth, and they're using some other modeling capabilities and modeling, web applications and things like that, where they can get data. They're having to go out very often and assemble this data themselves and see how they can correlate it and not make a mistake.
Can I?
I was going to say, Thomas, I'd love to hear your thoughts on that.
So the first thing is, yes, we actually do a lot of checking. As Cory mentioned, we have to check what is passed on to us. And to what Jay said, I mean, our data sets, when they've been mixed and matched, as he pointed out with the Las Vegas setup, about 28% of the data is wrongly mixed and matched.
Yeah.
So just so that that's a number.
One more time for emphasis. 28% of the data that you have at the reinsurance level, which is like big level, is incorrectly mixed and
Yes.
matched, meaning there's no data
Yes.
lineage in that data set.
And just to point that out is we actually can verify that it's incorrectly mixed and matched, which means that the actual number is probably higher.
Yeah.
And
that's your confirmed mismatch.
Oh yeah, yes.
There's a statistical probability of unconfirmed mismatch.
Without a doubt, those are wrong.
Okay. Which is staggering, right? Like if we think about like the need for geospatial, how we got here and some of the problems, it's that there isn't this one point, and then that creates this data lineage mismatch issue. And so how are you, like, we're going to move on to solutions in a minute, but what other stats are you seeing at the aggregate, like, reinsurer level, Thomas?
And Thomas, I would say that 25% is very optimistic.
Yeah, absolutely.
Well, as I said, it's 28%, and it's the verified. And I can tell you, the number has come down because we have been educating people.
Mm-hmm.
So that's like post like Swiss Re education.
Well, that's part of my mandate. I actually have to put together white papers on what we accept and what we don't, because there are a lot of really good things out there. But you know, it's like with everything. If it becomes interesting, then you find everything. And it really is that there's a standard. And so there are certain things that we accept. Ecopia obviously is one of them. So where we know that the data sets are really, really, really good.
So Thomas,
and we have to work with that.
On that, as Cory was mentioning, you know, a lot of people use, like, let's just take open source data. We can even like go beyond geocoding, like, right? Like there's so many disparate sources of data. There's, you know, teams that take YouTube videos and code them up based on like, you know, what the address sticks they see in the backyard are. There's all these third-party sources, and then there's high fidelity data and paid for data. And so there's this whole like this is kind of like the challenges of the data. Like there's a lot of openly available data. And then the high fidelity data, of course, is very expensive. But it seems like you're deploying a process that says somehow you're able to, I'll call it, decompose the data that's being sent to you. And you're able to get underneath it enough to know, like, is this from whatever? In that open source data example, they're probably not using a paid for geocoding solution. And then there's other high fidelity data, et cetera. One of the obstacles I had when I was trying to sell and service InsurTech to insurance carriers is a lot of the InsurTechs at the time didn't want to decompose their solutions because it was like secret sauce, and it's the way we built our pricing models. You know, it was all the things. So how are you all across the board getting underneath the hood to decompose the solution sets that are being sent to you? Like, is there a tag that says, like, we're using, you know, whatever, Geocoder A or Bing or, like, whatever? Like, how are you understanding that as a group? I'm curious.
Yeah, maybe I'll start with that. So, you know, the question really comes down to data provenance. And this has historically been a problem, not just in insurance, but everywhere. It's if you come back to something later on and need to reflect on whether data was accurate or not, whether it was validated later on, and you need to see, you know, what the lineage of that was. Understanding the source of the information and also the time it was acquired is essential. And, you know, when you look at the nature of properties, you know, they might stay in the same place, but they themselves don't stay static. The roof might be repaired or damaged or replaced, or, you know, as I'm fond of pointing out with the building I'm in here, when we bought it, we extended the house. And most, I really love looking at platforms that try and look at building material and size with this property, because I know exactly when it changed. And looking at the ones that have data that's now 5 or even 10 years old versus, you know, the reality that I know today is really a fascinating insight into, you know, the decomposition of attributes and the ability to validate, you know, what's accurate, what's not. But it's also a signal to noise ratio problem. So when you need to decompose down to a baseline level to understand what you need to underwrite or what you need for claims processing, you know, you could go and record the entire spectrum of information related to properties, and you would capture hundreds of attributes. The challenge is a lot of them for particular processes wouldn't necessarily be relevant to what you're actually trying to do and might in fact be a distraction. So making sure that the level of decomposition is appropriate, that you capture the things that you need for all of your processes without trying to capture everything, refreshed all of the time, because frankly, your data model would be, bigger than the planet. What we need to do is to understand, probably as an industry, data points about how we refer to locations, single sources of truth and points on a map. And I'm fond of the Australian system. GNAF is great, made by Geoscape, because it helps you refer to particular property attributes down to the floor of commercial buildings, or down to the building site location on a piece of land. But collectively, I think that we're going to go through this maturity curve over the next couple of years to agree on not just what we need to capture, but how we refer to those things individually as well. And already we're seeing this. I mean, if you go to two vendors of information in the geospatial industry of something as simple as roof material or wall and facade material, they'll use different ways to refer to those things. And surviving those and figuring out which one you record and how you refer to that is potentially creating a tertiary solution. So the maturity here needs to come not just from the decomposition, but from the data dictionary as well. And that might seem foundational, and it is, but it's essential.
Yeah, I often call it, that's why I like to use the word enterprise geocoding, Alex, because I often tell people that are not geospatial people, I'm like, it's basically like the maturation that we saw in data and data management hasn't yet come to geospatial, and a lot of people are like, I don't understand, and I think it was just the history of how it started and the volume of solutions. But before we move on to our third section, I'd love to know, Cory, Jay, or Thomas, if you have any thoughts about that, that decomposition and what you all are seeing. Like, how are you seeing those trends, and how are you splitting apart the solutions, if you are, and Jay, maybe from your customer's perspective?
Well, I can tell you, it takes tremendous analysis and evaluation by very, very sharp underwriting talent to be able to figure these things out and combine that with technology and data. An average insurance company system, if you just look at it as a relational database, probably has 200 to 300 tables in it, with thousands of fields. It's complicated. Right? And knowing your way around that for all the things that an insurance company has to do is really quite challenging, right? And so that just makes a lot of complexity, not even counting the data complexity itself, and making the decisions about what you want and what you don't want, and what are you going to pay attention to. So it's, thank goodness, like I said, it's getting better and it's evolving, but this is not an easy problem. I now see the policy admin systems starting to add data attributes to what they're doing. There are a few examples of that. So everyone knows that this is a huge problem that needs to be solved, but it's going to take time. I think it's years more, to be honest.
Yeah.
So this is really what
which is like, it's almost like, be careful what we wish for, right? Like in that scenario, it's like we need it, and we've got to find a way to handle it, which we're going to move on to solutions here momentarily. Unless, Jay, do you have anything to add on this before we move on? We good?
Yeah, no, we're good. Yeah.
Okay. So let's move on, because I think we're all at the edge. We're all at the edge of, okay, so how are we overcoming this? What are we moving forward with clarity? And really, Cory, I really love what you were saying there, which is it's probably going to take years. And there's this core sustainability aspect to this, which is, how are we going to do this in a way, like Alex, you were just highlighting, Thomas, you were highlighting, Jay, you brought in enterprise geocoding. How are we going to do this in a way that is thoughtful, that is systemic, and that is sustainable, right? Like how are we going to solve these problems? So let's like maybe flip over to you, Jay, and then Thomas. Let's kind of go reverse the order just a little bit. How are you seeing, Jay, I'll start with you. How are you seeing customers overcome fatigue, and what are they doing in terms of clarity and sustainable practices moving forward?
Sure. Thanks, Lisa. So I would like to answer this question in three parts. So how are they overcoming the fatigue and moving forward with clarity? So the first point being comprehensiveness. I know we talked a lot about enterprise geocoding. So and in the last topic that we discussed in the challenges, that you want to start at the foundation. So once you start at the foundation, then you're sure of the location intelligence, and then you bring on overlay property attributes, risk report, etc. So you want to be sure of the comprehensiveness. The second point that I want to make is accuracy at scale. So at one point, like at one end of the spectrum, there are manual roof reports that are being created that are super accurate, but does not scale. And on the other end of the spectrum, there are off-the-shelf AI solutions that are that can scale but are inaccurate. So now, like, our customers start thinking about how to scale and also be accurate at the same time. And the third point being nationwide updating. So I know, Alex, you mentioned that how like it's also a challenge where how do you know if there's an extension of the building that was created, or if a building was like destroyed and in a hazard, or it was just reconstructed. We found with the customers that we work with that they've been insuring some buildings that actually don't exist. So how do you manage that? So and how to overcome that is you want nationwide updating, so maybe quarterly, biannually, or annually updates to the data set. That way you're sure that you're getting the most comprehensive, accurate, and also the most up-to-date data.
Thanks, Jay. Oh, trying to come off me. Maybe, Thomas, what are your thoughts on this?
Well, there's tons of, I could go on for an hour now.
We could have a separate webinar on just each one of these topics, right?
Actually, I think there are two things which I really want to point out. The first one is sometimes I think with all of this data, you're so close that you see so many details that you don't see the full picture anymore. So quite frequently, it really makes sense to take a step back and look at the patterns. And that's actually one of the big things which we do, because we have to look at global portfolios. So seeing patterns and ensuring that we see the same patterns in all different countries, and this is really different to a lot of primary insurers, obviously, is that we can see that a similar approach was taken. So you have to have some kind of calibration tool, like Coca-Cola in chemistry. You have to have something that you can align it to so that you can actually start to compare different regions. And that's really, really an important point for us. And that is, by the way, one of the biggest things that we are actually spending a lot of time on. And then the second thing is, there's so much data around at the moment. You really have to cut it down to the essential ones. I think Jay or Cory said the same thing. It's really key, because then you can actually start to see it. We are pretty simple-minded as humans, not as good as computers. So we always have to try to bring it in 2 dimensions, so map it, right? And those are kind of the approaches that we take. And then the third one is, and I think that's the key, is in computer systems, we have always been testing, but you always only test whether you get a response or not. Actually testing whether the response that you get makes sense, that's a really key one. And that's one of the key points that we are really pushing towards. So if you take all of those things together and use a bit of fuzziness, so not to have everything in full clarity, then you actually get pretty good results.
Yeah, I like that. I like that lens a lot. Alex, sorry. You good? Okay. I was going to say, Alex, what are your thoughts on this? How have you solved world peace in one 3-minute example?
It's really interesting, and continuing on from Thomas's thoughts there in what we're now in possession of from a data perspective, and the nature of what we do as an industry, we can now look back and understand what we knew or could have known that we could have communicated to our customers. And, there's the thing that I'm fond of calling the creepy line, where we can see things that our customers themselves might not know, but might want to know. I remember an example from a few years ago where, we looked at customer roofs and we said, did you know that you've got a cracked tile on your roof, or your gutter is blocked because you've got trees overhanging, dropping leaves in there? But I would suggest that because of the evolutionary nature of the data that we're seeing, that we can record now, that we can capture in these systems, that we can accurately geocode and match to particular customers, we're now in the situation where we look back after a major hurricane and say, well, we knew that this building was going to be destroyed, or the roof was going to be torn off, or that you were going to be flooded. The question in my mind is, if as an industry we're truly about not just understanding and transferring risk and pricing risk, but mitigating risk as well, what can we do because of what we know that might have an impact on the experience that a customer has after a major catastrophic event? And, we can now point out, the things that we knew were going to happen. The real question in my mind is, what do we do as an industry? What do we do with our customers to make sure that this data doesn't just sit in a database, but also to make sure that it's actively used to understand what's going to happen in the future, particularly in relation to things like climate change, but also to influence the decisions that our industry and our customers make to potentially limit the impact of these events.
Yeah, that proactive angle, which
Lisa,
of course
can I just
been reactive. Go ahead. Yeah.
Can I just say something to Alex as well? Because I was going to say something. Just want to add something real quick. First of all, we also we do very frequent updates, but what we have actually started to do as well is we've actually put coordinates into contracts, because that's one of the best ways to do things like that. In particular, when it comes down to climate change, because you can actually show them how things have been changing over time, for instance, and you can say, hey, look, we told you you're going to be 10 meters closer to the ocean in 10 years time, or whatever it is. I'm just saying something here, but that really helps. We actually put geo-coordinates into contracts at this point.
It absolutely does. And the same goes with building standards as well. I mean, there was a classic case in the Australian Royal Commission after the 2019 bushfires. I always loved the fact that everyone said that's the worst thing that could happen in 2019 was the Australian bushfires, but I think the world proved us wrong. But when the regulator started encouraging us to communicate the nature of a risk to customers. Your building is made of wood on the outside, and you're in a bushfire area. So as a result, these forest fires are going to start impacting you and your ability to insure your property. If it's rebuilt, it'll cost a lot more. So, making sure that customers understand, at least at the macro level, how we're pricing risk and how that's changing and how standards are evolving as a result of what we know and what the world says. That's a great emphasis on the partnership that we have to have with our customers to communicate the evolving nature of risk because of what we know. So that's a fantastic point, Thomas.
Which is a perfect segue over to you, Cory, as well on this, especially being able to be like the best, at flood, right? So in my mind, this is so important because flood is becoming even all more, omnipresent. And so how you underwrite that in a world where severe weather events continue to increase, it doesn't mean exit area don't give people coverage, right? So how are you connecting this solution forward and applying it like, in reality to help people have the coverage that they need?
Yeah, well, I think there's a few angles to this. I mean, one is from the very beginning, we understood how important insurance capital is to the whole industry. And so we really work to protect that capital. So how do we do that? We want to make sure we're charging the right price for a given risk. And that may mean sometimes we don't get the business, but it means that we're at least being honest and realistic about it as much as we can. And that's what we do with the data. But I think that one of the things we often miss in the insurance industry, because everybody's worried about technology and insurance, and mitigation is a huge important thing. But I learned from a very senior executive in the insurance industry early on that insurance actually makes stable societies. And when you look at different countries, if you compare earthquakes in Haiti to earthquakes in Japan, for example, one country recovers in 1 or 2 years and has a booming economy, and the other one after 10 or 15 years doesn't recover at all and just stays in a slump. So you can't have a stable society. If you look around the world, 70% of people are uninsured or underinsured in the world. Just look at Hurricane Sandy. Hurricane Sandy hit the Northeast, the New York metro area. 50% of the people who had losses from Hurricane Sandy were not covered. That is the most insured square few miles in the world. Thomas could confirm that, but I'm pretty sure I'm right on that. So that's the place we've done the best, and we only hit 50% of them. So that's not good enough. And if you look at insurance as a $5 trillion industry worldwide, roughly, and we have 70% of the world to go, and we can't have stable societies out of it. You know, you mentioned ESG impact. That's the real ESG impact.
Yeah.
It's who's going to invest and build an economy if you can't make sure that your assets are safe. I mean, no one's going to do it. It's just that simple. So it's much more important. And I think we often get lost in the details and forget the actual purpose of what we're doing. And that really, to me, is fundamentally so important. So
now you hit on the, you know, I bet all of us on this call, we would probably always say that, so we'll wrap up and I'll ask what's your call to action. You know, I see one audience question that we'll address real fast, but I bet all of us would say that we were called to insurance. And the reason why we stay in it is for the, you know, I often say, Cory, my background was minored in macroeconomics. And so my background is, of course, the wealth and performance of you know, society is backed, pillared in insurance. So I think you couldn't have been more accurate. I just see one question coming in before we do our final call to action for you all. From Melissa, as we embrace this more granular approach, how do you think the perspective of flood zones might shift? How do you think the industry will support, educate lenders through this transition? I'll do a quick one on that.
Yeah, since it's a flood question, maybe I should take that one.
Yeah.
Anyway, flood zones are a patently bad idea. I will tell you that. They're inaccurate, and they make decisions that enforce things that aren't necessarily, you know, important or critical, and they miss other things where people are very unprotected. So we need a much, much better way. That's a data-driven way and an engineering way to actually assess flood risk. You know, you talked about floods happening more and more. Most people don't realize it, but in the US alone, since 1996, there have been floods in 99% of US counties. So it's not like you can go somewhere and say, I'm not going to have, you know, flooding. So it happens a lot. And we really need to get much, much better at assessing the risk, because just using flood zones is not going to work. And even the National Flood Program is not rating based on flood zones anymore. So even they're not using their own data because it's tremendously antiquated. And they're working on making it better, but still, as Thomas said, the landscape is going to change faster than those maps could be generated.
Yeah,
it's great. It's not going to work. And so getting lenders to really understand this, because again, lenders want to make a stable society that's based on financing, and you can't do financing if you don't have good insurance, and we can't give good insurance if we don't know how to assess the risk. So underwriting is key. And I think, by the way, I'll just say one thing is, I think when InsurTech started, there were so many different approaches and so much capital pouring in that really underwriting was kind of forgotten. And you saw,
I agree.
You saw a lot of the early companies, run into trouble because of that. Mm-hmm. Some of them are fixing it in a big, big way now and doing much, much better. And so that's great to see.
And before we do the kind of wrap up, the rapid 1 minute your call to action, I think also in addition to full stack InsurTech, because I think there's a lot of different definitions of InsurTech, Cory. So full stack InsurTech, you're right. And I think also when we saw a lot of geospatial InsurTechs enter the market, they really pivoted and they focused on claims. And one of my first observations helping develop global strategy for these InsurTechs was why aren't you in underwriting? If we've got to make sure we're underwriting this before we try to issue it back. And I'm super supportive of all my friends that do claims, notice of loss, and all the things we're trying to do, and communications and awareness and mitigation. But I was always confused that we seem to start at the back in my mind. And I'm you've got to get to the risk acceptance and risk decisioning, because that's how we kind of, if you will, build a moat around this and start enhancing. So I'm glad you brought that up, Cory, as a great reminder. Unfortunately, we're out of time, and we could go on. This group, I feel like we could be, at some lecture hall. I know Thomas is also just a PhD academia, but I feel like this group, we could be definitely in a lecture hall for at least 4 or 5 hours talking about all this. But to let our people that have joined from all around the world go, I would love to hear from all of you all. What's your call to action? So what would you ask everyone who joined in today? If you had 1 minute or less, we'll do it rapid fire. what would you ask them to think about as they leave this? And I'll leave mine on, I'll lead it off with sustainability in a holistic way. We often think of these big things as ESG. We think of things like community and economics, which is important, but don't forget the basics, which if we're processing something over and over and over again, by definition, that's consuming power, energy, money, consumption. So I say, like, go foundational, and I'm calling that applied sustainability, right? Like in the everyday moment, don't forget to be sustainable. So over to you, Jay, and then we'll go round robin.
Sure, thanks, Lisa. And yeah, just to reiterate what you said, and I promise this is the last time I'm saying enterprise geocoding. So the key takeaway that I have is to make sure that you start at the right foundation. When Ecopia tapped into the insurance industry, there was a lot of buzz around property attributes. Everyone wanted risk scores. Everyone wanted roof reports. But when we took a deeper dive in what this data is, we found that the foundation, the geocoding, the geometry had a big problem. And just to put some numbers into perspective, we did some tests using data for over multiple carriers, and then we found that they were only able to get the right point and the right geocodes and the right building 58% of the times. So as you can see, the foundation is a big challenge. So real quickly, I know we're over time. My key takeaway is start at the foundation and then move up.
There we go. There you have it. Thomas, your key takeaway?
Well, my key takeaway is actually insurance is nice, but not losing your house in the first place is even nicer, right? So actually concentrate, and risk maps are not the best, as we've heard for flood, for instance. Hazard, I think, analyzing hazard and putting those into perspective to your buildings and having the accuracy for that, I think that's key. And I'm actually a person who doesn't believe in noise. It's all signal. So we should better watch those signals.
There we go. Like that. Alex?
Yeah, look, I think the biggest learning I've had in this space over the last 10 years or so is that everything is about balance in partnerships. And that is to say that, there's never a situation where everything belongs on or needs to be done by industry participants or carriers or by insurtechs, but it's about agreeing on the approach that we take collectively. As we've heard today, carriers are, for all of their strengths, quite weak in technical evolution. Insurtechs are fantastic at creating the new and the exciting. QBE is never going to launch a satellite, but we're happy to partner with someone that does. And that's going to bring incredible new capabilities to us, as are 50 other spaces as well. The important thing, and it goes off what Jay was saying before, it's about making sure that we agree on the foundational components to make sure that we can take advantage of these things collectively. So agreeing on how we represent a location, on the fields that we use to represent the nature of a building. But the same applies to evolutionary data as well. I mean, in 5 to 10 years, there's going to be some incredible things in this space that we can't even predict now. But if we don't agree on how to speak about these risks, then we won't be able to take advantage of them on either side. So look, I'm excited for the future of partnerships in this space, but we're just getting started.
And Cory, so wrap us up.
Yeah, I know. Well, I could go on for hours and I won't, because I know you want it quickly. But, one is, I just want to stress that those of you who are listening that are on the underwriting side, you're very important to this whole ecosystem. And eventually you'll be the people that will actually help make the best decisions. Data standardization is huge. Coordinating all of this, all of the other points that were made are really, really important. But at the end of the day, it has to be people who understand the risk and know how to quantify it. And that's what we need to do to actually deliver on the promise of what insurance does quite well, but it could be done a lot better.